Glad to have a celebrity, old gangster, Lark Davis on our call today. And he has been giving investment advice for crypto investors from a long time back. I know as far back as 2018. When did you start your podcast, Lark?
2017. So I started
2017.
about July 2017, started making content, and it just spiraled out of control from there, basically.
That's amazing. You have 640,000 subscribers on YouTube, plus your other platforms. That is tremendous. I mean, what got you into starting a podcast on crypto?
Well, I think what got me into creating content was my own journey of learning about it. So interestingly, I've been keeping an eye on Bitcoin for years, never pulled the trigger. My mom messaged me in 2017. She's like, I want to buy some Bitcoin, but I don't know how, so you got to figure it out. So I thought, okay, it's time to actually look into this thing, figured it out. I said, well, that was not that easy as I expected it to be. 2017 was a lot harder. You guys are really spoiled these days with how easy it is to buy crypto. So bought some Bitcoin. I said, well, that was hard. Maybe I should make some content about it. Let's just post my thoughts on different social media and just document my learning journey, essentially. So that's where I started, was my journey in crypto, what I was looking at, what I was researching, the things I was learning, all that kind of stuff. And it just became something I never expected from there, essentially.
Now, if you could go back in time and give yourself some advice from what you learned in 2025, what would you tell yourself back in 2017?
Interesting. I think of a lot of different things. Focus more on the business side. I think I didn't take the business side seriously enough when I started out, just kind of having fun, which is fun. But if you're going to make it a business, you got to make it a business, right? So I would say focus more on the business side and revenue and sustainable revenue and stuff like that.
How about your investing journey? Because I mean, you got started with Bitcoin, and then you're just falling into the Wild West. Tell me how that journey developed for you.
Yeah, well, it's interesting. Of course, the second you learn about Bitcoin, really learn about Bitcoin, you dive down that rabbit hole, go, wow, this is amazing. But then you start learning about altcoins. Oh, wow, these are also all really cool. I got to get into these too. So my first purchase was Bitcoin. And then 2 days later, I think I bought 3 different altcoins, 2 of which most people probably don't even know the name of anymore. I bought XRP, NEM, and DigiByte. So XRP obviously still important, but NEM and DigiByte have definitely fallen out of favor compared to 2017, let's say. So you start going down the rabbit hole, you start learning more, you start learning what has value, what doesn't. And, a lot of it outside of a very small amount of coins is extreme speculation. And most of it has very short shelf lives. Now, people are going to say, well, crypto's uniquely guilty for this, but it's really not. If you look at the startup world, 90% plus of startups fail as well. Now, does crypto open up the doors a bit more to a bit of grifting and all that? Yeah, of course it does. But you just have to keep your rose-tinted glasses off all the time in crypto and realize what most of this stuff is. And most of it doesn't really have much value long-term, but it can be speculated on the short term.
Now, we've gone through several cycles, and typically we think of the Bitcoin 4-year cycle. And a lot of people are talking about what's happening now. The 4-year cycle seems to be blurring at the best, and there's other players coming in. How do you interpret where the market cycles are at these days?
Well, Bitcoin's been very lucky over its history that it's largely lined up with the business cycle and the credit cycle. The problem is now everybody's trying to put the 4-year mold on top of Bitcoin. Hey, you know what? Proven right until it's proven wrong. So if October 6th was the top, then 4-year cycle theorists win again. But if we get a new high for Bitcoin anywhere between now and, I don't know, the end of next year, then 4-year cycle is proven wrong. Historically, if you look back, what has Bitcoin topped on? It hasn't topped on just randomly X amount of days after the 4-year cycle. We have way too small of a data set to say that's a definitive feature. What we can look back on with much more certainty is when the business cycle tops, when the ISM PMI breaks out and hits around 60 to 65 and then starts retracing, stuff like this, the credit spreads, all these sorts of things. Those are the actual factors that tend to, if you line them up with the price of Bitcoin, tend to actually mark the top for Bitcoin.
What's your perspective on, or your advice to a typical crypto investor in terms of how he should balance his portfolio? You described altcoins as being extremely speculative, Bitcoin perhaps less so. And of course, we also have traditional investments with stocks and other funds. How would you advise someone to balance their investments portfolio?
Sure. So for most people, crypto is not going to be 100% of your investments. I know some people in my community, it's 100% crypto, nothing else. You can do that if you like not sleeping that much at night, that's fine. But if you look for, just say you're an average investor, you've got some real estate, you got some bonds, some stocks, whatever. 5%, that's about what BlackRock's saying right now, 5% of your portfolio into cryptocurrencies. It's a real asset class now. We're a big boy. It's real. We've got the ETFs, and it's been easier than ever to get exposure to these things. Now we need to start talking about risk and time. How much risk do you want to take? How much money do you want to risk? And what kind of risk do you want to take within crypto? You see, buying Bitcoin, Ethereum, Solana, you're already taking a risk, although those are the least risky investments you can make within the cryptocurrency space. So if you're very time poor, you don't have time to go down this rabbit hole of trying to farm DeFi airdrops and find the next big meme coin and research all these random altcoins that are coming out, trying to hit 100x, then you can keep it really simple. Within your wider investment portfolio, you can now buy Bitcoin, Ethereum, and Solana ETFs. Okay, put them in your brokerage account. You don't have to worry about managing your keys or any of that kind of stuff. And these three cryptocurrencies are going to give you a very broad amount of exposure to the cryptocurrency asset class. Will you get 100x from these coins? No. Okay, we're not talking about low speculative meme coins that you're much more likely to lose your money on than make money on. These are the coins that are much likely to be here in 5, 10, or 20 years. These are the coins that over the next 5, 10, 20 years are going to have a very high compound annual growth rate, likely much higher than the S&P 500. So from that perspective, putting a little bit of these in your account can have outsized growth potential while keeping risk relatively small. It's only 5% of your portfolio at the end of the day. And they've done studies on this, that if you look at the standard 60-40 stock bond ratio and you take about 3% of the bonds out and put in Bitcoin instead, your outperformance versus the standard 60-40 portfolio is dramatically higher. So 5%, top three coins. If you're time poor, you don't have a lot of risk tolerance, but you do want exposure to crypto, that's probably the way to go.
Oh, very exciting. Where do you see the market going over the next 6 months?
It's a very interesting question.
This is the big question. It's really just, any answer will work.
I think the 4-year cycle is being broken currently. Again, based on the factors we talked about, the ISM PMI is under 50 right now. It's still in contraction zone. It has not broken out this cycle. Copper is starting to move a little bit, which could be an early indicator that things are starting to swing in the direction of manufacturing. So a lot of the business cycle factors are showing that we are way, way, way away from a peak. That might be 6 months to a year away. So over the next 6 months, obviously there's a lot of potential for chaos in the market. We're all one Donald Trump tweet away from either Valhalla or Hades, right? So this is what we have to keep in mind. But I think in general, we have a lot of very positive tailwinds. Will there be corrections? Sure. Are stocks a little overheated at the moment? Sure, they have been. They've already corrected a little bit. They could correct a bit more. It'd be fine and totally normal. I think over the next 6 months, we're going to see a lot of front running of one particular narrative, which is what the Fed's doing. So in May, we get a new Fed chair. The new Fed chair, that's going to be somebody who basically is going to be a puppet of Trump. He's looking to get 1% interest rates. That's what Trump said he wants. So he's going to find a guy who's going to play ball to give him 1% interest rates. So quantitative tightening is going to end in December. Jerome Powell's already stated that. A lot of Fed chair members are already calling for quantitative easing. They're not technically calling it quantitative easing, but they're saying, well, we got to, do some technical adjustments that essentially equate to injecting more liquidity in the system, buying bonds back off the market, stuff like that. But it's not quantitative easing. It's not QE. It's technical adjustments this time, okay? And we already have Deutsche Bank and other big banks saying that's probably what's going to happen here in the relatively short future as well. So this is an unprecedented time in terms of loose financial conditions. You see, the 4-year cycle theorists are missing the big picture, which is that right now we have a different macroeconomic situation going on. In 2021, 2022, when the market started shifting, what happened? We had inflation spiking, rate hikes starting, QT starting. Okay, that's a massive shift. What do we have now? The exact opposite situation. QT ending, talks of QE, whether or not it even happens, the talk of it is enough to light the markets on fire. And all these other things. Trump's talking about stimulus checks now, $2,000 stimulus checks coming back to people, and all this other kind of stuff that's going on right now. These are extremely loose financial conditions that are only going to set to get looser over the next 6 months. So my guess is that between now and, let's say, April, May, we could have a good risk on season for risk assets, not just crypto, but AI stocks and tech stocks and stuff like that too. So that opens up an interesting window. Then maybe the summer doldrums, everything kind of crashes out over the summer. Maybe we get a final end of year rally into 26. Maybe that's it for the cycle. We'll see.
It's very exciting. I mean, the QE thing is, I know people have said that each QE is proportionally larger than the prior one, just because it has to refinance that plus the new needs. So that would mean this, if there is a QE starting up here in 2026, it's going to be far bigger than anything before. So with all the loose conditions you talked about, that would be really, it could be explosive. That's great.
Trump wants to run it hot. And he said multiple times he wants to run it hot. He said, we need to grow our way out of the debt. And the only way they're going to do that was with massively loose financial market conditions. It's got to be super cheap money, very low interest rates. They've got to flood the system with liquidity in order to get the jobs market restarted, in order to get the housing market restarted, in order to get money flowing through a relatively stalled out system right now. Does that risk inflation? Yes. But can they outgrow inflation? Probably not, but they're going to try.
They'll just redefine the inflation.
Yeah, that's it. That's it.
So the big news today, here it is on November 10th, is, as you mentioned, a Trump tweet, $2,000 rebate checks to people. These aren't really rebates. They're basically money back from excess that they collected from tariffs. It's money, excess money to have rather than what Biden did, which was to borrow the money to give these rebate checks. What's your initial take on what that might mean?
Dog coins to the moon. No, look, this is a really positive thing. And this is going to, I think, silence a lot of the haters in the whole tariff conversation. Look what Trump's done over the last, how long's he been in power? 8 months? Look at what the man's done in this time. Now, you don't have to be a Trump fan to realize that every time this man goes overseas, he gets trillions of dollars investment. He just went to Asia. He got South Korea and Japan together to invest like $1 trillion. This man gets money coming into America. He's secured, I think, about $10 trillion in investments in America from big tech companies, Middle Eastern countries, all this kind of stuff. I mean, that's admirable compared to when the other guy was in power. Every time he went overseas, Zelensky seemed to just knock a couple $billion out of his pocket. It was crazy. Anyway, that's a different conversation. Look, he's been getting a huge amount of investment into America, and the tariff thing is very interesting because he understood we have all the cards. Everybody wants to do business with America, so why not take some of that money, renegotiate our trade deals here? Love it or hate it, it has caused a lot of chaos in the markets. But if the end result is that they're able to turn around and say, hey, now because of this, we're going to give everybody X thousands of dollars per year, it's going to nullify a lot of that conversation on, now we have to pay a little bit extra because there's an extra couple % cost on top of this item that I'm buying from China. Yeah, but that's offset by the reality that you're getting money back from the government. So I think it's a very politically savvy move, and it's also going to inject a lot of money into the economy. So, which is good because Main Street has been suffering a lot throughout the past few years, right? The exit out of the Biden regime policies and into what Trump is doing right now. A lot of people suffered through that time. 2024 was a rough year, and we now have updated job numbers that show it was even worse than we thought it was. So now those people are going to be starting to get a little bit of help back from the government. This is the thing. A lot of investors and stuff, maybe we've always had money. I haven't. I grew up in a very poor family. Maybe you did as well, right? Or someone watching did. And so how much money $2,000 is. You forget about it when you're an investor and you're dealing with much bigger numbers. Like, $2,000, not that big of a deal. For regular people, I grew up in a household where $2,000 was, oh my God, if the tire goes flat, we're not going to be in trouble this month, right? And so a lot of people are in that situation. That's going to help a lot of people out. When those people are feeling just a little bit better, they're going to be able to go out and buy a new phone. They're going to be able to go out and buy a new tire for the car and bring money back into the economy, which creates a virtuous cycle until inflation spikes off. And then that's a later conversation. But in the midterm, it's going to be a good thing for the economy.
I know. I recall when during the Biden stimulus checks, I got a call from a client. I would have been like 2021, I guess. And he said he had just gotten out of college. He got a $2,000 stimulus check. He was unemployed. He put it all on Hex coin, and ended up having $400,000.
Oh
how do I? And then he took a piece of that and he threw it in at the Pulse. The Pulse coin. He was that. It's the type of success that you'll never do again in your life. And it's going to taint you in every investment decision you ever will have.
It's like winning the lottery. It's like winning the lottery. And I see this all the time in crypto where people get lucky on a meme coin and they run it from, I put in $1,000, now it's worth 2 million. Oh my God, I hit it big. And then they think they're a genius. I got news for you. If you hit it big on some random coin, congratulations, but you're not a genius, but you did win the lottery. And so like any lottery winner, you're probably going to lose it all very quickly, unfortunately, unless you actually talk to somebody who knows what the hell they're doing. And you can say, okay, well, I did well. I made $400,000. Maybe I should take 75% of that and put it in something that's not going to lose 90% of its value, because I'm maybe not that clever at investing. I just got lucky. But that's not what your recency bias is going to tell you when you have a big win like that, unfortunately.
Hey, one of the big things that's been happening, especially under the Trump administration, is that now we're starting to see positive regulation of the crypto industry. Up until now, we've been fighting against Gensler and just a lot of legal battles and basically trying to hold back the crypto industry. Now the Trump administration's taken off. He appointed an AI crypto czar. They put together a working group of how to get the regulatory bodies to work together to promote and create a pro crypto industry. It remains to be seen how that is working out, but they do have active activity there. We have the stablecoin legislations passed. Clarity legislation is now being discussed again, that Congress is back in session. What's your view of the regulatory environment that you see being crafted in the US?
What an absolute turnaround of fortunes for American capital markets when it comes to crypto. From the Biden era, where they were literally trying to kill crypto with choke point 2.0 and suing companies like Coinbase. They took Coinbase to court, man. That's so crazy. Now, complete opposite. Coinbase is launching ICOs. Their first ICO goes live in like a week or two. What a shift. What a shift around. This is extremely positive. And I was saying it back in 2024, and I'm glad somebody got in Trump's ear and said something similar, is that this is America's thing here. This should be what America does. Why not? Most of the developers, most of the activity for crypto comes to the United States anyway. Let America be the number one in crypto. And that's exactly what Trump says. That's his rhetoric now. We want crypto to be American. We want America to be the crypto capital of the world. That's powerful stuff coming from the most important influencer on the world, essentially, which is Donald Trump. So he wants crypto to be big in America. And also a very interesting thing with the Genius Act. And I talked about this for a long time as well, so I'm glad to see it finally came to fruition. The BRICS currencies and the BRICS group and all this kind of stuff has for a long term been sort of eating away at US dollar dominance and the weaponization of the dollar and all this kind of stuff. But now we have the Genius Act. So what are we going to see right now? If the US government's getting hardcore behind US dollar denominated stablecoins, that expands and elongates the dominance of the US dollar for potentially decades longer than it probably really should have. That technological revolution of the dollar is incredibly positive because it gets a lot more dollars in a lot more pockets all around the world. And already these stablecoin companies are within the top 20 buyers of US bonds, which is crazy. So that's really, really positive. Plus everything else is going on in the background. We've had positive banking rules, positive accounting rules. We now have major banks that for a long time have been cryptophobic or wary of the industry, talking about launching their own stable coins, doing custody. Even big players like Charles Schwab are going to start doing crypto trading for their clients next year. That's a $7 trillion asset under management company. They're going to bring out crypto trading for their customers next year. Like, this is big stuff. This is stuff that could not have happened under the Biden era. And this is now happening in the Trump era. So again, love Trump or hate Trump on a variety of issues. What he's doing for crypto, I think, is overall positive. Yes, he's lining his own pockets at the same time. Yes, there's been some massive grifts from the Trump family, but hey, you gotta take the good with the bad, I guess.
That's so true. I mean, I'm very excited to see the positive regulation, welcoming it in. I think it's going to be transformational. I think once they really start to, especially tokenization of securities, so they can start to move to a 24-hour market rather than business hours. And then if we start to look at tokenization of real-world assets, I just think this could be so explosive. And I'm interested to see how Trump is going to pull it off. It seems to me that if they could make the U.S. the location where you want your real world assets tokenized, they could, in effect, take ownership in a sense of all the assets in the world, that they're all traded in the U.S.
Yeah. Clinton, here's the thing. The U.S. is already the global center for capital formation. It's 55 to 60% on any given day of all stock markets combined. And a lot of foreign companies will launch on U.S. markets because why would you launch in your local markets? It's basically, in most cases, a pathway to irrelevance. A good example of this is a New Zealand company called Rocket Labs. So they're a very famous rocket company. And now what are they doing? Well, they've been on the US markets. They launched on the US markets, although they still launched the rockets from New Zealand. It was very interesting. But if they'd launched on New Zealand Stock Exchange, it wouldn't have done very well. In America, they've absolutely gone crazy because that's where all the capital goes. Okay. So this is very important. And people, this is the thing. It's not just, Clinton and Lark saying this. Larry Fink, the master of the universe himself, the CEO of frickin' BlackRock, what has he been banging the drum about nonstop for the last 2 years since they got into the Bitcoin ETF? They have been talking about asset tokenization. They have been talking about bringing everything on chain. You think BlackRock's taking a wrong bet here? No, BlackRock sees the future. They know what's going on. And I've always thought, well, ever since they announced it, see, BlackRock's going to launch the Texas Stock Exchange. Did you hear about this?
No, I hadn't. I know there's a lot of interest in a non-New York stock exchange.
So BlackRock, I'm not sure when it's going to go ahead, but they announced last year sometime they're launching a stock exchange in Texas along with some other big players. And my thought was when I heard that is, oh, that's going to be it. This is going to be the 24/7 market. That's how they're going to take away from the New York Stock Exchange and stuff like that. They're going to launch in Texas. They're going to do 24/7 trading. They're going to bring in tokenization. They're going to allow this in and out of assets from the Web 2 world to the Web 3 world. BlackRock's behind it. BlackRock's getting on board with it. And tokenization of assets is going to bring in literally trillions of dollars on chain. And it makes sense. It's literally just a better settlement layer. That's the thing that people need to realize. It's just better.
I look at things, of course, from a tax point of view. When you tokenize the assets in the US, then let's say you're tokenizing real estate in Italy. And you could then sell that asset in Italy by simply moving the tokens in the US. From a Italian point of view, there's really no change of ownership. It's not visible to the Italians, so they're not able to tax that transaction. And so this could create, especially if I couple, of course, right now in the US, foreigners are not taxed on capital gains. So foreigners can trade all they want and take all the profit home, whereas Americans have to pay capital gains tax. I don't think that's fair. I think we shouldn't have to pay capital gains tax at all. But
it's cool being a foreigner, by the way. I just like to point that out.
It's cool. Well, the whole purpose is the U.S. wants to be the number one place foreigners put their money, and with this tokenization, you're at the same time you're bringing all their assets and you're really making an international financial market out of the U.S. Perhaps it's in Texas, but you're also taking a lot of tax money out of companies all over the world, and they'll never be able to trace or track it. So it's incredible, especially if there's no tax. Well, there won't be any tax, but it's very dramatic what could happen if they really pull this off.
It's a huge value sink. So much money is being pulled into America. And the example you gave of that Italian property, right? Great example. You know what? You're going to take that property, you're going to tokenize it, you're going to take a loan versus that on Aave, you're going to go buy dog coins, you're going to get liquidated on it, and Blackstone's going to buy it. Boom. Just like that. It's going to be just very efficient.
Yeah, they will own everything within the next 10 years.
Oh, man.
So how about, since we're a bit of a tax show, how's your journey been from a tax point of view? How have you discovered the role of tax, and how have you tried to address that in your own life and manage the tax risks that you have?
Nightmarish. That's part of the reason I moved to Dubai, to be honest. Absolutely nightmarish. Over half my net worth has gone to paying taxes. So living in New Zealand, right? 39% tax on all crypto sales, essentially. I mean, over 180,000 New Zealand dollars, about 100,000 US dollars. So for most crypto investors, you're going to be looking at a 39% tax rate when you're selling anything over that sort of level. So that's a lot. That adds up a lot. And the New Zealand government sort of taking the perspective that, like, well, our existing regulations are good enough, so whatever. But we found so many, of course, areas where the existing regulations are not even close to good enough. I had a really great tax accountant back in New Zealand. We went through so many issues, like, okay, so if I put money into DeFi and I get a proxy token back to say that I own that position, that's a taxable event, even though there's no value in that token, but I got a proxy token, I received something back. But if I put the money into a protocol that doesn't give a proxy token back, then that's not a taxable event. Like, little things like this just don't really make any sense. In-kind swaps are taxed. So if you swap from Ethereum to wrapped Ethereum, that's a taxable event. A lot of little things like this. And also, I used to be a US citizen once upon a time, not anymore, thank God. And that was a bit exciting too, because there's some interesting, and this may be applicable to people who may be US citizens living overseas. I had all my crypto through a corporate entity in New Zealand, and the corporate tax rate was 28%, I think. But interesting little tidbit of information was that if you have a corporate overseas and you're the sole, I'm not going to tell exactly properly, but if you have a corporation and you're the owner of that and it's making profits, and you get taxed back on your US taxes at the personal income tax rate, which is what my accountants told me from the US. And so that was a very large unexpected tax bill of about 9% extra, which was the difference between the US tax rate and the New Zealand corporate tax rate. So there are a lot of fun surprises along the way, all of which, there's a lot of reasons why I moved to Dubai. It wasn't just taxes. If it was just taxes, I don't know. It may not have been worth it, to be honest. It's been a lot. And we also had a lot of, it's not officially an exit tax, but it's kind of like an exit tax. It's a lot of money. So we had all kinds of very large expenses in making the move over here, but I think it's been very well worth it. Obviously, the tax situation is very favorable. There's no income tax, no capital gains tax. There's a 9% corporate tax. So money that I make from the business side of things, my newsletter and stuff like that, that gets taxed at 9%. All the personal income, anytime I sell crypto, no tax on that, which is honestly a game changer. Even sales tax is much lower here. It's 66% lower in Dubai than it is in New Zealand. It's 15% in New Zealand, 5% here. So that makes a big difference too. All these little things you think about, all the ways you get taxed, right? Back in New Zealand, it's like, wow, you guys take a lot of my money. Holy cow. So moving here to Dubai, I mean, obviously it's not for everybody. And for Americans, it'll be a much harder thing. There's very, very few Americans in Dubai because of the way the passport works and you're taxed globally on your income. Right. But I think for a lot of people, French and British people, they're moving here because they have a very, very favorable tax regime here. And you already see what's been proposed recently. France is talking about bringing in a tax on crypto assets. They're unproductive and they'll have to be taxed because they're sitting there. The UK is talking about a 20% exit tax now for anybody who wants to leave because too many millionaires are leaving and they don't want all the money to leave. So instead of making the country nicer and a better place to be, they're just going to take more of your money on the way out the door. So
I think cryptocurrency has really made this much more possible. Before, if you made wealth, you did it because you had a company, which means people and buildings and markets in a geographically restrained area, or you have real estate, or if you're investing in particular stocks, you're kind of tied into that country's stocks. But with crypto, I can go international and I'm not restrained. And once you start to look at that, you start to realize, why can't I craft a more tax favorable environment for myself? I'm the one working at making this money. Why is a government entitled to 39%? That's just ridiculous. I know Donald Trump has talked about eliminating and radically reducing taxes. It'd be interesting to see what happens. I think that more and more people will consider leaving the country, and especially politically. I mean, depends on who gets elected. I mean, Trump gets elected, all the Democrats flee the country, and vice versa, when a Democrat's elected. So yeah, I think that's, you're the modern citizen.
It's interesting to think about what you get for your money too. You start thinking about it. And I was having this long conversation with my wife about think about the tax we pay here as kind of our service fee for the country, right? That's what we have to pay to live here. So that's our service fee. And so you got to think, okay, well, what do we get for our service fee? We lived in the capital of time. So New Zealand's been going through rough times recently. There's been recession and stuff like that. And like a lot of countries, but it's been much slower to recover. A lot of young Kiwis are leaving because the New Zealand government's really not making a lot of opportunities for companies to come and be there and set up their shop there. It's already such an isolated place. There's certain reasons why you'd want to move your company to New Zealand, but a lot of young Kiwis are leaving because of opportunities. So we were driving around the capital and I said, well, look at the roads. They don't even paint the roads anymore. Where's the pride in our capital city? They're not even painting the roads. When was the last time painting the roads? 3-4 years ago? Barely can see the lines of the road anymore. 1 in 3 businesses is shut down, drive around for lease. Everything is shutting down, more homeless people and rubbish on the streets than ever before. And so I'm saying, how is it that in our public infrastructure, they're canceling all these big public infrastructure projects that are absolutely critical for the country? There's no bridge connecting the 2 islands. There's a ferry system. The ferries are outdated. They keep breaking down in one of the roughest sections of water on the planet. But they canceled the new ferries. They canceled the port upgrades. So you have this conversation. Well, if we go to Singapore, absolutely top of everything, best infrastructure, best everything, right? But hospitals in New Zealand are struggling because Australia poaches all of our nurses and doctors because they make way more money in Australia. I get it. So you have to ask yourself that question. What do I get for all this money? And this is really a question that I think a lot of people in Western democratic societies are asking themselves right now. Look at France, right? Look at Spain that's got a wealth tax. Look at the UK, huge taxes. And so you walk out, your streets are dirtier than ever. Things are feeling pessimistic. All these different problems are arising. And you're thinking, why am I paying half my money? I'm working 6 months a year for this. You think of the amount of money they take, why can't my country look like Singapore? For the amount of money they take, why can't my country look like Dubai or Abu Dhabi? Those are interesting, or Monaco or any of these other places. You got to think about it. It's interesting. And so I think a lot of people are now voting with their feet and they're moving. And you see the immigration statistics. There's a lot of great maps that go around on a pretty regular basis. But you see the massive outflow of wealth from Europe, really most European countries. There's some little moves within Europe, like a lot of people move into Italy. They have a very favorable tax program over in Italy, for example, for high net worth individuals. But a lot of people leave in the UK. A lot of people leave in China and Russia, obviously, places like that. But they're coming to places like Dubai. They're going to places like Singapore. And for a good reason, because they're going where they can live a better lifestyle for less money.
It'll be very interesting. Maybe as a part of Donald Trump's final play, he radically changes the U.S. tax system. If he eliminated capital gain, well, capital gain is not a big issue if you're a foreigner, but if you come to the U.S., all of a sudden it's an issue for you. If he eliminates it for everyone, no capital gains tax on anything, and reduced regular individual income tax rates, it would be very easy to see people starting to say the new Dubai would be the United States. Plus you get the life and the culture. I think this is where he's headed. If he can slash the cost of government and restructure additional sources of income like tariffs, I think this would be his. I think this is what his sons think about. I know Eric Trump's talked about it. Maybe it would happen one day. Hey, that's very exciting. Hey, as we wrap it up, where would you advise people if you're looking for? I know you track altcoins. What are your 3 best altcoins going forward?
Ooh, good question. I like Solana. I think Solana is a very interesting altcoin. You look at all the metrics, it feels massively undervalued to me. The high inflation on the coin, which if you're staking the coin, you're a beneficiary of that. The high inflation of the coin may have been holding it back for a little while here, but you look at it's got an ETF. It's the most used chain by far. The number of daily users and all that stuff just through the roof compared to everybody else. So that's one. I'd pay attention to Solana. I've got Solana, of course. These are bags that I have because I have conviction in them, right? I really like Pump Fund. I think it's a very interesting one right now. There's based on their daily revenue buybacks. If their current revenue buybacks of the token equate to about 30-40% of the circulating supply of the token in a year, these are huge buybacks. Their revenue's absolutely crazy. Even when the markets are quiet, they're still doing $1.5 million a day in revenue, and that's all going to buy back their tokens. So that's obviously more of a speculative one, but I like what they're doing, and it's one of my bigger positions right now. And let's go for a YOLO play here, which would be the Pengu meme coin. So I don't play with a lot of meme coins these days, but one of my bigger plays is the Pengu meme coin. And when you're looking at meme coins, you're really looking at how much attention does it get, how much does it trade off of that attention, and I think this is one of the ones that has that staying power to keep getting attention. Obviously, wildly risky, right? So if you're gonna go and say I'm gonna look into that thing, keep your risk size very small, guys. Okay.
Very good. Hey, it's super exciting talking to you, Lark. How can people, if they're really interested in your investment advice, how can they get in touch with you and follow and get more?
Come find me on X, Lark Davis on X. Make sure it's the verified account. Find me on YouTube, right? Lark Davis YouTube, or check out our newsletter, the Wealth Mastery newsletter, thewealthmastery.io.
All right. Hey, thank you very much. And if you enjoyed this video, please hit the like, subscribe, and follow. It means a lot to get this message out to other people. Thanks.